Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He's the CEO of the company that invented the Inc. Canadian Insider Index, which is used by the Horizons Canada Insider Index ETF, a 2017 Fund Data Fund Grade A Plus Award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
It's great to be back, Jim.
Breaking news. We have President Trump saying that talks are underway between the U.S. and the EU to reduce tariffs to zero. And we hear from Mr. Leitner that negotiations for NAFTA have gone well and they're perhaps close to completing the deal. Is this good news for Canada?
Okay, well, certainly the NAFTA news is encouraging. I doubt that you would get those kind of remarks out of the U.S. unless they had realized that they're close to getting a deal. So that's positive. That's very positive for Canada. With respect to the Juncker-Trump kind of love fest they had in the Rose Garden yesterday, the zero tariff announcement related to a pledge to work together to get zero tariffs on non-auto industrial goods. But Jim, that's exactly what Obama had been working on in his tenure. So, well, we see Wilbur Ross out, doing some chest pounding, saying how great this is that Donald Trump got the Europeans to move in this direction. The fact is they were already moving in that direction under Obama. So there was a lot of smoke and mirrors in that announcement. It was put together pretty heavily, and let's just say I'm skeptical that anything material is going to happen in 2018 from that Rose Garden meeting. Now look, the fact that they're not slapping more tariffs on each other is a positive development. So the fact that they're not throwing punches anymore is good. But let's be clear here, nothing changed aside from that. There's no tariffs were reduced. There was just an agreement to go back to the negotiating table. So we'll have to see how that plays out. We've seen this before in NAFTA where Trump agreed to sort of hold back on the steel and aluminum tariffs as long as negotiations were going, and then eventually he ran out of patience and on they came. So we'll have to see how that plays out. But the news on the NAFTA front is encouraging, and let's keep our fingers crossed that we actually get a deal.
When it comes to tariffs, so isn't China the biggest player here? And if you don't have a deal with China, the tariff war will still continue?
China is a huge deal, and when you think of it, it's not just a bilateral situation between the United States and China. If the China-U.S. trade war continues, which it looks like it's going to, you're going to have additional uncertainty with respect to a whole bunch of things. I mean, you can just start listing them off. How does the U.S. Fed respond if inflation goes up due to tariffs? How does the U.S. Fed respond if U.S. business investment starts to dry up because of uncertainty? How do other countries respond if the U.S. starts to subsidize farmers who are being hurt by this? So there are still a lot of what ifs around the China situation. It's uncertainty. I'm not sure this is going to be positive for markets. We're not seeing any insider indications that they're doing victory laps here on the Trump style. If anything, we saw our U.S. insider sentiment indicator head back to where it was on January 26th of this year. That was the day, Jim, that the market peaked. So insiders are cautious. I would be very cautious about the outlook for trade improvement with Europe, and we're certainly nowhere near a trade agreement between the U.S. and China, that's for sure.
We'll have more with Ted Dixon right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Ted Dixon. Ted, going back to farm subsidies, if the U.S. starts to subsidize farmers, and they've criticized other countries for doing that, would that encourage other countries to continue things like Canada's marketing board?
Exactly. That's the huge question. It also gives countries an opening to launch trade disputes against the United States for those subsidies. So not clear how that's going to play out. Well, we'll just have to see. And this is what I find, amusing. The market soared on the rumors of this meeting in the Rose Garden with Juncker and Trump. But there was really little substance behind that agreement in terms of deliverables. Is basically, I guess, the market cheering that they're going back to negotiating table. But there are a lot of uncertainties that remain. When we had, the interesting development, that overshadowed, I think, the Rose Garden event was the Facebook earnings, where we saw Facebook really blow the horn, saying, look, we really are going to see margin compression. We are really investing a lot in security. Now, they've been talking about this, for months. And, I saw, one commentator on an American business television network, who I will not name, but saying, oh, this came out of the blue. Well, no, it did not come out of the blue. In fact, Facebook has been talking about this for at least a quarter, if not more, that they were going to have to incur lots and lots of expenses to deal with infiltration of Russia into the platform and other problems, privacy. So, no, this was not news. And really, I think what happened this quarter is that, yes, there was actually more information provided on what this means, but they were actually pounding the table saying, look, this is a big investment we have to make here, and it's going to drag on profitability. And, throw that in with all the other metrics, such as slowing daily average user growth, and you had a massive sell-off in the stock. We'll see if it impacts the other technology sector stocks that have been high flying here. There's, cases for both, but the big question is, investors who have had big gains in their tech sector funds, are they going to redeem those funds, and what will they do with the cash? So that's the multi-billion-dollar question facing the U.S. market right now. The very encouraging sign today, so far, midday here on Thursday, is that you see value stocks outperforming growth stocks. Now, that's really not a big surprise given what has happened to Facebook, which is a growth stock. It's being crushed here, down double digits. But for the U.S. market to really make sustainable new highs, you're going to have to see that money that's coming out of tech going into the broader market. That means industrials. Okay, so is that going to happen? Well, we'll have to see. There's still a lot of uncertainty with respect to industrials, particularly the auto industry. Wilbur Ross said, look, we're still investigating the European car industry for a potential 25% tariffs. Cars were excluded from the Rose Garden announcement in terms of goals. So there's still a lot of uncertainty in the industrial area in the United States. Will investors put their money behind the Trump strategy and bid up stocks at these levels? That's really what investors have to look at. Our indicators in terms of insiders are not betting on that. They're stepping aside this summer they're going to wait and see. We'll see if investors follow suit or if they move their money into the broader S&P market. And there's one good way, I think that investors can follow that. If you go to CanadianInsider.com, we now have live U.S. stock quotes. You can look at the equally weighted Guggenheim S&P 500 ETF. The stock symbol is RSP, not to be mistaken with the Canadian RSP program, RSP. And what that tracks are all the stocks in the S&P 500, but on an equally weighted basis. So if you have a real broad rally, real investor enthusiasm for the overall outlook of the U.S. market, that ETF should be outperforming or at least staying even with the market cap weighted ETF, the SPY, which is the S&P 500 index. It tracks that. That is the index that is widely quoted in the media. But really what you want to see is that RSP starting to regain some ground here against the S&P 500 SPY ETF. And you can track that in real time on Canadian Insider. So investors should keep an eye on that in the next few days, especially we have Amazon reporting tonight. That's one of the remaining, FANG stocks that have been helping to drive the market. Let's see what happens after the results from Amazon. Let's see if investors, even if the results are positive and given Amazon's market power and pervasiveness in both retailing and cloud computing, it wouldn't surprise me if they have a decent quarter, but do investors take money off the table anyways? And what do they do with that money? Do they put it into money market instruments where interest rates are rising? Or do they redeploy it back into the broad U.S. stock market? That is the major question at this point now.
Do we need to see new leadership on the old-fashioned value stocks to make sure that their little push continues?
Yes, we do. And the reason being is that what the predominance of growth stocks has signaled over, really the last 9 years, you've had many spouts of value stocks having their day, but it's been primarily growth stocks. What that symbolizes or signals that growth is actually in short supply in the economy. And when you think about it, it has been up until maybe, last quarter, and we can talk about that in a minute, in Q2, but, the U.S. has been bumping along 1%, 2%, 2.5% growth. Kind of ho-hum. Well, investors have gone into growth stocks to try and beat that, right? To say, well, look, we can do better by going into tech stocks that are growing at much faster rates than the economy. If you have a broad economic boom, if the economy is growing strongly, you don't chase after growth stocks because there's lots of growth around. What you look for are cheaper stocks that are going to benefit from that growth. So value has its day. And what that means is you've got a more sustainable economic recovery in the eyes of investors, and they're looking for bargains to take advantage of that growth. So, for this Trump economics to be really vindicated as a winning strategy, you really need to see growth stocks outperform value stocks here, because that would be signaling that U.S. growth is the real deal. I just saw a tweet though from David Rosenberg, and it's, kind of bang on the money, basically, suggesting that, Uncle Sam's bond market has really been driving a lot of the growth here. They've borrowed a lot of money to cut taxes. Is that really sustainable? And, so, that would be something that would suggest that this growth spurt that we've had under Trump is maybe not sustainable. However, if you see that value stocks start to outperform growth stocks, then, then maybe the Trump doctrine will be working and we'll march on to new highs. I'm kind of skeptical here, but based off of our insider sentiment indicators. But look, maybe they're too gloomy. Let's just see if value stocks can outperform growth stocks.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, Amazon recently announced that it would be building up in Vancouver, 3,000 to 5,000 jobs to be provided. Now Walmart has announced that it's going to build a $175 million fulfillment center in Surrey, which is next door to Vancouver. Does this mean that Vancouver effectively is going to become the new high-tech hub of Canada?
Well, I don't think fulfillment centers would qualify as a high-tech investment. Now, I'm not familiar with the Walmart announcement, so maybe it's more than that. But if it's a fulfillment center, well, you see these popping up all over the place, and it's usually a combination of local economics that drive those factors. The Amazon move is a little bit more significant. I mean, they're just really good business people. No one will ever accuse Jeff Bezos and his team of not being sharp cookies. They're pretty sharp, and they identified that the IT and programming and engineering talent in Vancouver is, some of the best quality at the cheapest price in the world, and at least in the Western world. So that would indicate that, people are discovering that there's a real value here in Vancouver. Unfortunately, branch plants like Amazon, I'm not sure they're going to build up a sustainable nucleus of innovation. I'm sure they want to keep their innovation to themselves. So we'll have to see how that plays out. But it's certainly a positive for workers in the short term. Help to bid up wages. But whether it translates into a hub of innovation, there's a lot that goes into that. Sure, it's great to have some anchor employers like that to keep your talent in town. So that's a positive. But then you look at the fact that the provincial government raised income taxes on, people I think are earning over $150,000 a year. Well, any really good programmer worth their salt that's going to be leading a team is going to be earning around that, if not more. How are you going to keep those people in Vancouver if you're taxing more, half of what they're taking home? And of course, we know the housing problems, and then we have the federal government that hasn't exactly been on the ball when it comes to promoting competitiveness in Canada. They've been dragging their feet on that, and that's certainly an area that they've got to get their act together on pretty quickly here. So, there's a lot that goes into the factors that would make Vancouver an emerging hub. And the Amazon announcement can be helpful, but it could also be a drag if it's not combined with other developments such as competitive taxes for people and some real momentum on the innovation side amongst companies here. So I'm not sure all those pieces are in place yet.
The OECD just said Canada has to do something about taxes to remain competitive with the U.S., or it will suffer great economic loss.
Well, we have to do something on two fronts. We have to ensure that our personal income tax rates come down. It's absolutely ridiculous in this day and age to be taxing the workforce, okay? We want people to go into the workforce. You don't tax things that you want. You tax things that you don't want people to do. You don't want people to smoke. You don't want people to drink a lot. You don't want people, to drive 200 kilometers an hour on the freeway. So you fine and tax those activities. You shouldn't be taxing smart workers. You shouldn't be taxing company leaders. You shouldn't be taxing, people who are on the edge of the workforce deciding whether they're going to move in and out. And that was one of the brilliant moves of the Doug Ford campaign to pledge to get rid of income tax for minimum wage workers. I hope they follow through on that. Because you want more people coming into the workforce. You don't want to be taxing that. And, make your taxes up somewhere else that you want to discourage. But the income tax should be the last area. And the other thing the federal government has to do is get a handle on the regulatory burden in this country. I mean, all you have to do is look at the Kinder Morgan pipeline. What a disaster that was in terms of how the federal government handled that. This company had every major permit needed to do that project. They were willing to put up private capital, but due to Ottawa's incompetence, and there's no other way to do it, to describe it, except it was Liberal government incompetence on that file that made them have to buy the pipeline. So, the federal government knows that there's a problem there, but, do they have the smarts, the ability, the instincts to actually fix it? I mean, that's going to be a real test for them in the next election and in the next few months. Bill Morneau has been let's just say an uninspiring finance minister. I think I'm being charitable on that characterization. He's really got to show that he understands this. I'm not sure he's got the background for it, to understand how Canada has to improve its competitiveness and how he's got to get a handle on the regulatory burden. And if the Liberal Party cannot get its head around that, they're going to leave a huge opening for the Conservative Party with its uninspiring leader, Andrew Scheer. Andrew Scheer, I don't think is as sharp as tool in the shed, but I can tell you something. I think he's got enough of a blade ready to cut into red tape and to regulation, and that may be enough for the Conservative Party to win a minority government. Particularly given how Morneau and Trudeau botched the small business tax file last year. So, the Trudeau government's its own worst enemy here. If it refuses to fix the competitiveness situation in Canada, then they're just asking for trouble in the next election, and it'll be totally self-inflicted.
The federal government has absolutely no expertise with pipelines. Could you see, ironically, Kinder Morgan being hired to supervise the federal government's pipeline project?
I don't know what they're going to do. It's a real mess. I'm sure there's all sorts of complications on any type of solution. My gut feel, and I have no inside information on this, is that Morneau was hoping that some pension funds would come and operate it. Maybe he's still trying to work on that. That's, his background in terms of dealing with those people. That's what I'd be looking for, but maybe there'll be some other solution that comes down the pipeline. We'll have to see. But, what a disaster that whole file has been. And, the Liberals really need to show that they can get a handle on, mega projects, and not just mega projects, but also red tape for small business. They need to see the light on regulatory overkill in Canada, and they need to see that light pretty quickly.
Ted, anything else you wanted to add today?
Well, let's just keep an eye here on what the U.S. insiders are doing. It's pretty critical for the overall, I think, investment health of a lot of investors. So we're really going to keep an eye on our industrials indicator. It's been sinking. It hasn't got to the danger warning level yet, but it's almost there. So we'll be doing an update on Wednesday to our subscribers on how our U.S. industrials indicator is looking. But in general, though, I'd be really cautious here as U.S. stocks move to try and take out new highs. If you see the RSP also take out new highs alongside the SPY, well, then maybe we've got the genesis of a sustained move higher. So let's keep an eye on that in the next couple of weeks.
Ted, thanks a lot for chatting with us.
Thanks very much, Jim.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca. His website, CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.